Good morning and welcome to the Killik & Co podcast for Friday the 14th of November. This week we had the Bank of England inflation report, in which Governor Carney said that inflation is likely to fall below 1% in the next 6 months and rates will be held till the second half of 2015. That's been good for the house builders and the construction sector, which is up around 6.5% since October the 15th, so that's been a strong performer. The US dollars continue to be a strong performer. Here we've got the longer dated chart going back to 73, and as you can see, this uptick in the US dollar is really at its very early stages if we look at the longer term movements we've seen in that currency against other currencies, and that's continuing to play out in the equity market. So here you can see the Euro Stoxx 50 against the S&P 500, and you can see that chart's broken down with the US markets now starting to outperform the European markets again through quite a significant technical support there. In Japan this week we had early rumours of an election in December where President Abe is looking to confirm his mandate to stimulate inflation in that economy. And potential for a delay in this consumption tax rise, which we had the first phase of that early in the year. That was very well received with the Nikkei 225 hitting a 7-year high and the yen hitting a 7-year low. This weekend we've got the G20 summit. The agenda here is to agree an action plan for the G20 to grow their GDP by 2% over the next 2 years. In China, we've seen quite a strong market, as you can see here, despite relatively disappointing numbers. And this week we had an industrial production number and retail sales numbers, which were pretty lackluster. What we feel here is that the market's starting to anticipate a policy response from the Chinese central bank that will stimulate that economy and response to what's happening in Japan, one of their key trading competitors. We also had Singles Day in China, which is the largest online shopping day in the world. $9.3 billion were transacted over one day, and in 90 minutes we saw enough baby milk powder sold to feed every baby under 2 months for 2 weeks in China, just in the space of 90 minutes. So you can see the power of the internet, and Alibaba shares have been extremely strong since IPO, up 68% since they came to the market in September. That power of the internet is becoming an increasingly important conversation topic because as we see at the moment, you can see a lot of the internet companies, the Googles, the Alibabas, the Amazons of this world, are in a position where they're not paying for the infrastructure that they're operating on, and internet service providers are having to invest more and more into the infrastructure to allow them to deliver more and more services over the internet. So this concept is net neutrality, and it's relevant this week because President Obama came out and publicly asked the Federal Communications Commission to protect net neutrality, and that is the equal, neutral access to the internet for everyone. What has been happening in this space over the last year is that we've started to see a movement towards fast lane internet access. So within the States, Netflix have paid Comcast an undisclosed fee to get superior access so their customers can view internet TV over the internet and not suffer poor service and buffering rates. So this was a big thing this week, and President Obama asked for a number of things to be implemented by the FCC. No blocking of legal content regardless of the size. No throttling, so an ISP cannot slow content based on the service, and no paid prioritization, so none of those sort of fast lanes that we're starting to see. Why is this important? Well, if we didn't have net neutrality, this is what the internet might look like, and you would see a switch of revenue from companies like Google, like Netflix, over to the ISP providers, those big businesses like AT&T and Comcast. Week ahead, this week much lighter in terms of results. We're through the Q3s now, pretty much. In terms of UK companies, we've got British Land and Easyjet on Tuesday. We've got Royal Mail on Wednesday. Centrica, Melrose, BHP Billiton on Thursday. On the macro data, we've got some industrial production numbers in the US Monday, important sentiment indicators in Germany on Tuesday, US housing, and a very important manufacturing number from HSBC on China on Wednesday, and the Philly Fed business sentiment survey coming through on Thursday. Just looking at Easyjet, because we've got their numbers on Tuesday. This share price has been a strong performer, obviously helped by a falling cost of oil. But I think it's probably been more than that. I mean, the airline sector has been one of the best performers, or the best performer over the last 2 years in terms of industrials in the US. And it's a factor of investors becoming more confident about those business models, which were highly cyclical. And that's because we've seen a lot of consolidation in the industry with very limited new entrants coming in. We've seen improved balance sheets. And we're also seeing real sort of constrained volume growth, so prices are being protected, and airport capacity is one of the reasons why volumes have remained constrained. Equally, we've seen more efficient mechanisms for airlines passing on the variable costs of their services to the consumer, and more efficient aircrafts are changing the economics. So as a result, you've got an industry that's sector that's trading on 10 times forward earnings. But you've got forecast earnings growth of around 20% for the next 5 years. So we'll see on Tuesday whether Easyjet confirms that thesis and that continues to play out. That's it from me. Thanks very much. Have a good weekend.